iBuyers have played a very big role, not only in the run-up of prices here in the Phoenix area, but now how those prices are declining since we have entered into our market shift. Nationally, we saw investor purchases increase by about 141% in the first half of 2021. And during this time, these investors were buying 1 out of every 5 homes on the market. And during the height of the market, just the iBuyer portion of the investors were buying about 150 homes every day. Now, by the third quarter of 2022, investor purchases had dropped by 30%. And in Phoenix, investor home purchases dropped by 49.4% year over year in the third quarter, which is the largest decline of all of the 40 metro areas that Redfin analyzes. Now, some markets did see a bigger increase in investor purchases overall, and Phoenix just happens to be one of those at the top of the list, with about 31% of all homes purchased being purchased by investors. The question now is, are these investors and iBuyers still buying homes? And are they affecting our home prices? Now, there is some distinction between investors and iBuyers. The iBuyers are the buyers, well, now more sellers, that have been systematically reducing their prices and offering large concessions to the buyers just to help sell their homes, thus hurting the home prices where they own a lot of homes in places like Phoenix. These are companies like Opendoor and OfferPad. Now, Zillow and Redfin were also in this space, but they both got out of the business after they realized the model just doesn't work, and they both lost billions of dollars. Now, I want to make another distinction about these investors. You have the iBuyers, like I just mentioned, and then you have the mom and pop or small investors that are either buying these homes to turn into short-term or long-term rentals, or buying them so that they can flip these homes. And then you have the institutional investors. These are the people like Invitation Homes and Blackstone. These are backed by Wall Street money, and they are buying up homes to specifically turn them into rentals. Now, the biggest difference between these iBuyers and the mom and pop and small investors buying these homes and flipping them is that these mom and pop small investors actually put money back into these homes. They renovate the homes, they upgrade the homes, they put value into these homes, and they do all of this before they put it back on the market to sell it again. The iBuyers, on the other hand, buy these homes and usually have them back on the market within about 10 days. Now, they often say that they have done work to these homes, but I don't know about you, if you've tried to do any major remodel project within 10-day period, it just doesn't happen. So they are literally buying these homes, doing next to nothing to them, and putting them back on the market for a substantially higher price just to profit. To show you just how drastic some of these differences are, I wanted to get into the Cromford report and show you what the acquisition price was and the sales price was for all of these different iBuyers and other flip investors. So just to call this out, so the blue line is the acquisition price, or the price that they purchased the home for, and the orange is the sales price. So this right now is showing you all of them. So our blue price is the acquisition price. So if you take every one of these flip investors and put them all into a pool, we have an acquisition price at $417 and a sales price at $414. Now let's take all of them out, and I'm gonna put just Opendoor in here. So these are only sales from Opendoor, what they bought it for and what they sold it for. All of their homes, these are averages. So they bought all their homes for $482,600. They sold them at an average of $410. That's a huge reduction in price. Okay, so here, let's take a look at OfferPad. And one thing to note about OfferPad is that they've always been more conservative. They will buy less homes and they will pay less money for them. So you can see in their numbers how different they are from some of the others. Okay, so just for OfferPad, their acquisition price was $490,000 and their sales price was $464,000. So still losing money as a whole, but not near as much as Opendoor. And now these are the other flip investors, the mom and pop, the small time flip investors that we just talked about. They're adding carpet, they're adding flooring, they're painting, they're putting in new cabinetry, they're putting in new countertops, they're doing things to add value to the homes. And on the average, they are paying $335,000 for the homes, and they're selling them for $395,000. So these investors are actually still making money. Now, as you can see, their margins have shrunk quite significantly. However, they're still making money. Now, I can honestly tell you that I've taken some buyers out, and we've looked at some homes that were listed by the iBuyers, and we've looked at some homes that were actually flips by the small investors, and they feel the difference. Some of them have come out and they've said, I just don't feel like the iBuyer homes that they're owned. They have no soul. They have no feeling to them. Whereas the mom and pop investors, these small time investors that have put their heart and soul into them, they feel the difference. And it shows in the value and the prices that they're getting for these homes. Okay, so now I want to take you into MLS so I can actually show you some homes that were sold by Open Door within the last 4 months so that you can see the pattern of what they're doing and how they're affecting these home prices. Okay, so here's the first one. This one actually sold for $417,900. Couple things to note. So this home was on the market for 668 days. The concessions that the seller gave to the buyer were $12,357. It was originally listed for $536 and sold, like I said, for $417. These are some of the things that I look at. These are very telling, just kind of the patterns. So this home was listed all the way back in June. Our market was just starting to shift. We had shifted for a little while, but it was just starting to shift. So here they were in June, and the price reduction started also in June. So they've done 1, 2, 3, 4, 5, 6, 7 price reductions since it was listed in June. The interesting thing is, and you'll see this as we start to go through, it seems as if they stopped their price reductions in November. They did no price reductions in December. And unless it's gone under contract, they're barely starting to hit those price reductions again here in January. Okay, here is another one. This one sold for $445,000. Was on the market for 108 days. Concessions to the seller, $14,500. That's a lot of money. Again, it was originally listed for $576 and sold for $445. So let's just take a look and see how many price reductions they did. It was listed in July the first time, and they ended up doing 1, 2, 3, 4, 5, 6, 7 price reductions. And again, that last price reduction was in October. They did no more price reductions since October, and then it went under contract and it did sell. So here's another one. This one sold for $409,000. It was on the market for 118 days, originally listed for $510, and it sold for $409. But here's the big thing. It sold, and the seller gave the buyer $26,000 in seller concessions. That's a big number. So it didn't really sell for $409. It sold for a lot less. To dive a little deeper into this house, again, it was listed in July, and from July, they did 1, 2, 3, 4, a lot, 5, 6, 7, 8, 9, 10 price reductions before they got it under contract and sold. But as you can see, as you're looking through these price reductions, you can see the systematic way that they were doing some of these price reductions and the percentages that they were using. They're not all the same, but very, very close. And this is how they were just reducing prices, lowering the prices, lowering the prices, lowering the prices. And this was affecting everybody. Okay, here's another one. This one sold for $422,000, on the market for 150 days, originally listed for $515, sold for $422, and the seller concessions from the seller to the buyer were $17,500. Again, a huge number. Then just to look at, again, price reductions, what did they do? Their systematic ways of reducing their prices. So it was listed in June, and since then they've done 1, 2, 3, 4, 5, 6, 7 price reductions before they got an offer to get it sold. Now, I know on my channel before when I've done this, I've also gone in and I've looked at what did they purchase the home for versus what they sold it for. Here's what I'm going to tell you, because I didn't want to dive into every single one of these like that. Every single one of these is a significant loss. Then take on that additional seller concession. They have on every one of these homes, it is a significant loss. Now, I didn't want to just show you things that sold. I also wanted to show you some homes that were active and show you how they're reducing their prices and kind of how they've switched their strategy just a little bit. So this house is listed for $408. It was originally listed for $500. They've reduced their price all the way down to $408. It's been on the market so far for 156 days. If we go into this history tab again, we can see all of this activity, everything that they've done. So they listed it in June, and so far they've done 1, 2, 3, 4, 5, 6, 7, 8, 9 price reductions. You'll see this as I'm going to show you a couple. It looks as if November 3rd was kind of their cutoff date. That was when they stopped doing some price reductions. But if you see in what I just showed you, from that time, what they were doing in addition to, after they've already done all their price reductions, they were offering massive seller concession. So here's another house. This is active on the market. It's listed for $409. Is originally listed for $426. It's been on the market for 111 days. And since they've had it on the market in September, they have done two price reductions. And again, I was off a little bit. So November 16th, the other one was November 3rd. Right there in that November timeframe, it looks like they've just stopped doing any price reductions, and they didn't do any in December. Okay, here's one last active on the market. So this one's on the market for $413. It's been on the market for 201 days. Originally listed for $520, now on the market for $413. And let's just take a look at their price reduction. So it originally listed in June. They've done 1, 2, 3, 4, 5, 6, 7 price reductions. And again, here's that a November 16th date. Drop dead. Like that was the last time that they did a price reductions. They're just kind of holding firm, offering some seller concessions to the buyers in hopes to get some of these homes sold. So as the Phoenix market really heated up, you can see how the different percentages of homes of how they were intended to be used were changing. So we normally sat with this is owner occupied. We would normally sit right around that 75% of the homes that were owned were owner occupied owned. As we started to heat up, here's 2020, we started to heat up and our market got really crazy. And you can see how our owner occupant ownership actually started to reduce. What took its place? Investors. So you can see right here, 2021, 17%, 19%, 19% again, 20%. The other piece, this is in the Cromford report, and they actually break out investor versus iBuyer. So these iBuyers really started to engage in the third quarter of 2021, and then again in 2022 in the second quarter. So it really shifted how our home ownership looked overall in our market. But as you can see, as our market has started turning 2022, this is the second quarter, we kind of started to fall off in May, June. Now in the third quarter of 2022, you can start to see that our owner occupant homes started to increase. And then again, in that fourth quarter, we're back to 75% of owner occupants. The number of iBuyers buying, 1.6%. So they have drastically reduced the number of homes that they've been purchasing. And the number of investor-owned homes has also reduced. Not as much as the iBuyers. They have drastically pulled back, but the investors have also pulled back, just not as much as the iBuyers. The Phoenix market has really been ground zero for these iBuyers. In fact, most of them started buying homes in the Phoenix market before they bought anywhere else. Now, these iBuyers do not buy homes in every single price point, so it is not having the same effect on all the price points across the board in the market. However, at about $500,000 and lower, this is having a drastic effect on this market and the pricing. And these iBuyers, as you just saw, are losing a ton of money. Now, another thing to note is that for regular sellers, if they are not in a rush to sell or don't have a real reason to sell, even though they have their home on the market, they're not feeling as much downward pressure on their price to reduce their price and really play the same game as these iBuyers. So they are kind of sticking to their purchase price. But a lot of these homes don't need the work that the iBuyer homes need, and therefore they are getting a higher price. So hint, hint, buyers, if you are out there looking for a home and you want the best deal, I would highly suggest that you look into these iBuyer homes that are owned, because this is where you can get the best deal. And now I've been asked, because I've said this before in some of my videos, how do you find these homes? Well, you ask your trusted real estate professional to get you a list of all of the homes owned by the iBuyers where you would like to live. They will be able to get it because we can search in our MLS by ownership. So ask your real estate professional and they can provide that for you. Now, something interesting I noticed when looking at a lot of these iBuyer homes, as I mentioned when we were looking at them in MLS, they really kind of stopped doing some of their price reductions in November. November 3rd, November 16th seemed to be some of those dates that they really stuck firm to and did no more price reductions after that. There are a few, like I said, there are some exceptions, but for the most part, they seem to try to stand firm in no more price reductions after November. What we did start to see increase were those seller concessions like we just talked about. As I showed you, there were some multiple with $20,000 or more in seller concessions. And something to note about regular resale homes, the average seller concession right now is $9,500. So not only are they reducing their purchase prices by a lot and reducing them more than resale sellers absolutely have to, they are also giving a lot more in seller concessions just to sell these properties. So after all the price reductions and the increase in the seller concessions so that buyers can buy down their rate, they are actually able to get into a home that has a much more affordable home payment. And right now, buyers have an even bigger advantage because our interest rates have come down even lower. So if you're able to buy down the rate from 6 to 5 or even a little lower, it makes the payment that much more affordable. Just to give a little perspective, a single percentage point decline on the interest rate has the same impact as an 11% decrease in the sales price. And many of these homes have already seen 11% or more decrease in their sales price. Now, if you'd like to see more about how these iBuyers have been affecting our real estate market, take a look at this video right here. If I can answer any questions for you, please feel free to reach out. As always, I thank you for watching, and I'll see you next time.